Good morning, everyone, and welcome to the PivotBoss pre-market video for Friday, April 5th, 2019. I am Frank Ochoa, aka PivotBoss. Happy Friday, everyone. Real quickly here, we have the NFP report coming up here pretty soon, 1 hour before the RTH open. That's probably going to provide at least a little bit of juice to the market here. Overall, the market, as you can see here in the ES and the daily time frame, has been mostly quiet here over the last couple of days. The ADR values, basically the daily ranges, have shrunken significantly. Right now, the 5-day ADR, which basically encompasses these days down here, is 19.95 for the 5-day ADR. Haven't seen something that narrow in quite a while. The 10-day is 28.65. So basically, that's a huge difference between the 5-day and the 10-day. And anytime you see that type of differential, you usually see a shrinkage there of that price range. And then eventually you see expansion again at some point. But right now, price range is clearly shrinking. Right now, we're at 8.75 points of RTH range in the ES. This is just very, very narrow. The market is waiting for something. And so far, it's holding above the previous month's high, but it really hasn't gotten much traction above those highs. And we're still trading around that 28.78 half key level. Again, if this market cannot hold 28.61s, we see some sort of counter trend rotation here like we've seen recently. That could be bought yet again, right? We haven't even tested the pivot range for the month. It's a higher value relationship, but we started the month hot. So again, if this thing can't hold 28.60, we may see quite a bit of a rotation here back toward the pivot range. From there, expect bulls to defend unless there's a failure to hold 27.90s. Alright, so let's take a look right now at the NQ. Very similar price action, this one with a double inside day that is developing. Inside day yesterday and another inside day today. 29.75 points is the current overnight range and pre-market range. That's 30% of average. We have a current 10-day average of 98 points and a 5-day average of 74 points. So again, it's shrinking significantly over the last several sessions here. And again, sitting here above these highs, if we don't see continuation, we could easily pull back to the pivot range yet again, or at the very least reversion to the mean inside the trigger zone of the PIMAs. Alright, let's take a look here at crude oil. Now, crude oil has been extremely bullish ever since the sharp rotation here last week of the 2018 year. We saw every pullback here with new lows being rejected, a nice swing higher yet again. And right now we're currently on the pullback phase. So you see we have multiple day range here, a 4-day range, very tightly coiled price action there. Again, what could happen is we could see one big day down, perhaps testing 60 or so, and then it could spring back up, forming another rejection day like something like these. And then that could lead to the next rotation higher. Overall, crude oil still has more upside to go. It has barely recouped perhaps half of this move here of the original sell-off, and now it's coming back. But right here, 62.5 is kind of a key CLV in here. We could have a little bit higher to go into 65s. So again, any pullback here with a higher value relationship could still be a great buying opportunity ahead. Got to continue to be patient. Right now, a very tightly coiled 4-day range could lead to at least a near-term breakout. If it's to the downside, we could see at least a point to 2 points of downside price action. All right, let's take a look lastly at gold futures. Here's gold. Now, I mentioned previously that 1320 was very important. If we couldn't hold it, we could rotate back to 1280. We got to 1284.90 yesterday. We talked about this narrow 4-day range with the narrow range down here as well. And again, that narrow price action here usually forecasts expansion down the road, usually, right? That's just usually what happens. Every single time that we get the blue bars here, it's usually preceded by the pink bars, which means compression leads to expansion. And in this case, we're seeing it again. and we're currently testing the midpoint of yesterday's range. Again, we could still see a little bit lower. We didn't quite take out the 1280 low, but we're starting to see a little bit of a rejection signature developing here. This type of rejection signature could lead to a bounce back up. If we take the low, if this low remains intact, and we go about 35 to 40 handles higher of range, which is what we normally see, that would take us to between 1320 and 1325, back to these recent highs. So again, based off this low, this would be in flow with what we've been talking about with regards to volatility. So right now, got to see if this thing holds. If it can't hold the midpoint for the day, perhaps we go a little bit lower, but again, 1300, a very clear level. Above 1300 we'll squeeze at some point. Alright everyone, that is it for now. We'll see how this plays out heading into the NFP report and the rest of the session. Have a fantastic weekend, and I will see you all soon. Take care. Happy Friday.